Well, hello. So, just for first, I want to review what I said um, yesterday in yesterday's forecast, and that was that I expected on the longer term that this will continue to. Uh, I expect this to continue to incline to these levels. Um, so you can see that it's treating that it treated what happened yesterday is that this is an average of a longer term trend of this longer term trend. But the reason why I went up higher than that is because it's actually in the longer term in the future it needs to get to this level. Um, so in the longer history, more of the chart averages are higher than the current price. So the current price is oversold, is what they would call oversold. If we continue to look at these longer terms, you'll see that it is definitely oversold. Now the reason for that is the only reason is because the U.S. dollar is the I believe it's the U.S. dollar is the quote currency. Um, it is the denominator currency. So um, the uh, the price has been is currently favoring U.S. dollar, but it is oversold. It's favoring it too much. In other words, so it needs to sooner or later it will need to correct. And right now that correction price is starting at 350 pips up. So if you buy, you should be able to catch some of that, but definitely expect a longer term move, a long term move up. So like I said yesterday, this wasn't very good. This wasn't a very good risk reward, risk area, risk zone. Um, and this was the reward region. So this wasn't a very good buy setup yesterday either. Um, but I did say that it appeared that I expected it to expected a buy and to reach this level, which it did. And you can see that the highs here was not the highs of the day, but it was some highs, and they're actually the polarities for these past lows on these days. Um, so I think I'm going to start doing that also, is integrating this polarity type, because there's another way you can trade this is through horizontal lines. These are diagonal lines. These multi trend trends are diagonals, but I can also use horizontal lines, and you can see here this this area here would be the risk, and you can see that the price is inverting on this line, either trying to buy with support or selling with resistance. Okay, here's selling with resistance and then buying with support. So that's currently what it's doing here. So I think I'll start looking at those charts too, start offering those charts as well, that analysis. So if you're hoping to get some more buy action in that, there were two ways. Like I said, it could just keep sliding down with this risk zone, or it could choose to go to this reward target here, and that's what it did. It went to this reward target. So if you were dollar cost averaging or euro cost averaging, buying lower, then this would have been a target. This could have been an exit target. So let's look at the next day. So nice thing about this is that the monthly and weekly ranges are both focusing on the same point, so which is higher than the current price. And let's see, that's about 350 pips, the 350 pips by target that I was talking about. So Um, although this is an average, the price decides where it's going to, if it's going to keep moving down. If it keeps moving down, then this average will also move down. But you can see that the other longer term averages are also above it, which means that the US dollar is currently very oversold, and you should be ready for it to devalue, essentially, on a very long-term scale. I think about like in a scale of like 7 years. So so on the shorter term, we have these regions. This typically the smaller regions represent the risk region, and or the decision zone, and the larger regions are the reward regions. So what I would see is, again, this this is how to say, the stronger tendencies for the stronger trends are located here, which means that it would sell. I think it has a stronger tendency to sell right now back to these longer term averages. But again, we don't have any risk region here, so unless you want to sell it just to hit these middle term trends for 50 pips, hopefully to make 50 pips, then and also against the these longer term targets, you could do that. But as you can see, that's very little money. So basically like 60 pips versus this 330 pips. So unless I had a clearly defined risk region here, tradable risk region, then I would say that the price is not in the position for me to trade it for the sell. So ideally, I would wait for this price to come back down here, and then I would use this as a risk region. I would buy it and use this as the risk region and this as the reward region. So that is a very good trade. At the end of the day, it looks like 40 to 94, 40 pips to 94, just 1 to 2 risk reward. So it would be tradable to me if this fell to this level here, and then I bought it again to this target. So unless that happens, I wouldn't trade this. I would mark this as a day that I would not trade, and unless it falls to this level, and then I would buy, and then use this as a target and this as the stop, this being the risk region. Now, alternatively, on the horizontal polarities, I'll show you the horizontal polarity style now. So what I do is look for clearly defined points where the price inverted from mins to maxes, or maxes to mins. So for here, you see that there's a very clear line here, but the price is nowhere near this, so we keep going to the price, towards the price. So here's another polarity here. You can see we have maxes here and we have mins here. It's not very well defined though, and it's pretty far off, so I'll keep zooming in. This one's a recent high, and it corresponds to this minimum here, also to this high here, so I'll mark that, and also to this min here. So you see, as I zoom in, that's still nowhere near the price. So we're looking for polarities, tradable polarities that are currently near the price. Okay, so currently here, here's a min, here's a max, so that's a polarity, and also another max here. You can see there's a few maxes here with the min. So we're getting closer. 300 pips off. Okay, so you see another polarity here. We've got maxes here, and we have mins here. and also this min here. So this is where I start to make the risk the risk regions between the max and min region. So you can see that we've got a min region here, and I've got max regions here. So I'll make this the risk zone. Okay, we can see in days that we've got many days compared to that zone, that region. So we're gonna keep zooming in more. Now this is where you need more analysis, right? The greater analysis is more important. So I've got mins here, and I have maxes here. So I did already mark that area, so I can keep marking that area. Also have a retracement min here, so this gets really precise, I think. So I'm going to put it at these two, this area right here. I'm going to remove this, and I'll mark this as the current tradable risk region, as a tradable risk region. To remember that my average daily range is 73 pips, so I can only expect to get 73 pips out of that. So 75 up from that looks like I do actually have a min and max here also. If you can see, there's a min and a max here. So just to have something to trade, I can mark this as the current. Price is also at this value. So just to have something to trade, I think this is a pretty strong point here. As you can tell, I've already got a reward region that is greater than 2 risk regions, right? So if I'm currently at this region, I could sell this price, use this as the stop, and then this as the reward. But the price goes above it, then I need a target for that, for the buy. So you can see I put in an order for a stop and target. Currently at the current sell, current price. Stop is here above that risk region, and the target is here at this polarity.